Stan Shamu joining us from IG in Melbourne now. Stan, what do you think? I mean, obviously, threats of the US perhaps there with a strike against Syria. What sort of impact could you see this having on markets? And obviously, we've already seen that final hour of trade on Wall Street.
Yeah, well, at the moment, it seems like it's just resulted in a bit of consolidation, particularly in the FX markets. It's been a lot of sideways movements. Nothing has quite sort of escalated just yet. But of course, at the moment, I think it remains firmly more skewed towards that Kiwi repricing, which is exactly why we saw the US dollar initially lose a little bit of ground to a lot of the majors following those disappointing core durable goods orders numbers. And of course, heading more towards the end of the week, I think it will continue to be more about how the US dollar reacts. And of course, if we do get a situation where it escalates over in Syria, then potentially the trade will switch to the safe haven currencies, which is primarily the Japanese yen, and then the US dollar will come in as a secondary beneficiary of this. So either way, it does look like so far markets are relatively calm. We've got the Aussie dollar holding just above that 90 level still, so nothing much has happened really. The dollar yen's sideways at about 98.40, so there's nothing much going on. With the UK closed as well, there wasn't too much of a reaction. Now I think today we've got the China industrial profits numbers. They might have a bit of an influence on risk, and of course the Aussie dollar. The previous reading was up 11.1%. There's no real consensus on this number, but I think a lot of analysts out there are quite optimistic about the figure, given the fact that the HSBC manufacturing PMI print last week came in quite strong, and this generally is generally a bit more skewed towards the private, smaller businesses. So this might be a bit of a positive lead for the industrial profits number. And if it does come in much better than expected, we could expect to see Chinese markets do well, and in turn, this could boost risk assets, particularly the Aussie dollar today.
And given the range that we've been seeing and that support level of 90 US cents, I mean, what sort of range are we talking then for the Aussie if that data is stronger than expected?
Yeah, I think in the short term that will be oscillating around that 90 level. Of course, selling into strength will probably be the most preferred strategy by most traders out there, but there's not too much data for the actual Aussie dollar this week. So we do think that most of the movement will be from the US dollar side of things and how it reacts to different data prints, and of course with the developments we get from the Syria conflict. So I think it is a hard call this week without any real leads for the Aussie dollar itself. But of course we can only look at levels, and at the bottom line for the Aussie dollar is around that 88.40 mark, which was the recent low, and to the top end we'll be looking more towards that 92.5 level for selling. So it is a fairly wide range, but in times like this it's really hard to make a call on it.
Just in terms of our market then, what are you expecting for the open, a weak start?
Yeah, absolutely. We're looking at a drop of about 0.4% at the open. So of course this is just leading from a fairly poor close on Wall Street, and of course with the UK closed without too many leads from that front as well. So it really makes it hard to call. I think the focus will switch to earnings yet again today. We've got a couple of names that deserve some attention. Of course, we've got Billabong set to hit the wires with its full-year results. Underlying profits expected at about $10 million. But of course, the major number will be asset write-downs of around 500 million, and obviously other costs as well. I think more importantly will be the commentary around the recapitalization plan and exactly how Billabong looks to stay afloat going forward. I think that will be what most investors will be looking out for. Of course, its share price has continued to hold about 50 cents after having slumped for a while, so it should be an interesting stock to look out for today. We also have Flight Centre, which has actually been one of the best performers of the year so far, and it's trading within striking distance of its all-time high at around that 47.59 mark. So that's going to be something that the company really has to deliver for them to maintain this run that they've had so far. Of course, it's their full year results, and they've already given a guidance range of about 338 to 342 million. Now, a lot of analysts are expecting the figure to come in more towards the top end of guidance, given that the company has continued to perform strongly across most geographies. And of course, they've got a very solid cash flow as well. So we'll have to see how that works out for them. And of course, from a currency perspective as well, the recent weakness in the Aussie dollar and whether or not the fact that they are well diversified geographically will help them, give them a natural hedge to the swings in the Aussie dollar recently as well. So that's going to be definitely one of the biggest reports of the day. And of course, going forward, I think that's where most analysts feel they might disappoint slightly with slower growth into FY14, given softer economic conditions in Australia as well. So it should be an interesting one. We've got gold names back in focus. Of course, gold hit 1,405 overnight. This Syria tension might help push the precious metal higher in the short term as well. But of course, I think with Silver Lake coming out with a capital raising, I think we might see this trend continue across other gold names, taking advantage of the recent share price strength to try and raise capital, and of course be prepared for times when gold might not be quite as strong and sentiment might not be as good on gold names. So we'll look out for that. We might hear other gold names starting to do that in the short term as well.
Stan, as always, thank you. Plenty to watch there. Stan Shamu there from IG, and this Stan was just previewing Billabong, the expectations for its result today, expecting a $560 million wipeout when it reports. Analysts predicting the struggling surfwear retailer will unveil huge write-downs, leading to a full-year loss in excess of $500 million. The impairments are being triggered